Hi all, this is Ashish Kyal here. Welcome to Elliott Wave News channel by Wave Strategy Advisors. It's time of the week again at 4 p.m. Friday. I'll be discussing about the ongoing state of Indian equity market using different techniques. So the entire theme of starting this channel is to probably educate and also at the same time discuss my views about what's happening around using various different technical methods, using certain methods which probably you might not find anywhere else. So let us again quick start on where we are currently from the trading perspective and where is Indian markets headed. So if you look at the charts, we can clearly see that after the sharp fall on 29th, we discussed that the price were at an important support level and it should bounce back. You'll not believe the bounce back did happen and it exactly reversed again on the upside. It touched the level of 8,800. That was the point from where the event started, and again it touched there. And then the trend, which was the original trend, again started on the downside. So now we are again close to the very important support, which is the zone of the previous lows. As you can very well know, the previous bounce back happened from 8550, and we are now we have breached that support, but again we are showing some positive attempt from there. So the reason for such kind of a positive attempt and there is no momentum which is picking up on the downside is the fall has been in an overlapping fashion. So when we are doing Elliott wave, and especially when we do advanced part of Elliott wave or say Neo wave, a very important concept is to understand the nature of the fall. So the fall which started from the top of around 8960670 levels, the entire fall has been in an overlapping fashion without any strong momentum on the downside. Nevertheless, there has been a swings on the downside, then the pullbacks on the upside. So far, it has continued to form lower highs and lower lows. I think it will make more sense for me to show the charts and then explain what I mean, because that gives some perspective about how the markets have been moving and what should be the trading strategy one should adopt in order to capitalize on the market movements. Over here now, if you can see my screen, this over here you can see the entire chart of Nifty and the fall which started from 896070 levels. This is the fall. So the first thing that any trader or any analyst should do, probably, or the way I work is try to draw the channels, because drawing channel is the most important concept that anyone should follow. It gives some perspective about the maturity of the trend, how far or how much it can go. So over here we can clearly see the fall has been moving in a downward sloping red channel. That's one. So we discussed about channels in the previous update on Friday as well, and we can clearly see how the fall has been in a downward sloping channel. Next is the important trend line support still exists and it's still valid. So the low which is started from 8960 is very close to the low of the red trend line support. So the problem with the big trend line support is that it keeps changing with time, but nevertheless it still acts as a very important support. So we are at a very important juncture again. So we discussed an important juncture just on 29th, and we are discussing again an important juncture right now. So over here we are at a very important place. And from Elliott wave perspective, if anyone has to look at the entire move that started from Feb or early March, the entire move has been in an overlapping fashion. So we might have completed say wave A, B, and then we completed wave C on the upside. Then we had wave X on the downside. This was a small wave X. Again, we started A, we completed B over here, and we again had C on the upside. Then another wave X, which went down in an ABC formation, probably on the Brexit day. So a very clear three waves ABC formation, which completed the lows here. And then the move which is happening on from the lows of the Brexit, which was close to around 7825, I suppose, 79257930. That low was very important, and from that level, we have been seeing an overlapping rise again. There is definitely no impulsive move from those lows, and this entire rise is again probably dividing into something known as a diametric pattern. I'll not be able to discuss much about the diametric pattern, but it gives a very clear perspective that we are probably completing the F leg of the diametric pattern, or we have already completed F leg, and we are in maybe in the G leg of the pattern, which is probably the last leg of the pattern. And also remember, there cannot be more than two X waves. So we already have two X in the entire pattern. So there cannot be more, and if we are in the G wave, then post its completion, probably we should see some kind of a move on the upside, and post its completion, the bigger downtrend should start. During such scenarios of complex correction, the other techniques that one can rely on is probably a moving average technique. I mean, this is a very important concept which many of the Elliotticians or many of the traders ignore, but it's a very important and basic concept where you can use two different moving averages to understand what is the trend. So in this entire down move, if you check, whenever the red trend line, whenever the red moving average, which is a smaller moving average, is sustaining below the bigger one, we have seen a sell-off. Even in the current move, I mean, as soon as the red was above the blue, then we saw some pullback on the upside, and as soon as the red crossed below the blue line, and the pullback was also not sustainable, and even the red line did not move decisively above the blue line, and then again we started seeing some kind of a pullback on the downside. So over here, if the red line or the red moving average, which is the shorter moving average, moves back above the blue one, we are again going to head back towards the channel resistance, or probably we might break that as well. So the point is, if we combine these kind of moving average methods along with channels and along with Elliott Wave, that gives us a lot of perspective into the trading strategy one should adopt. And moving average helps us to understand what can be the probable turning areas. Channels helps us to understand the key support and resistance levels. And Elliott Wave helps us to understand the maturity of the trend, how mature the trend is, and what to expect next from here on. So when we combine all of these techniques together, we get a lot of insight into what should be the probable outcome over next few days or few months or few years. And this is what we keep doing, and this is what we are going to also discuss on the webinar which I am conducting on 20th and 21st of October, where I'll be discussing how we are combining these various different concepts of technical analysis together with Elliott Wave and time cycle in order to get a very high conviction trade setup. Okay, this is the probable outcome, and this is the method that one should follow. Based on the probable outcome, what should be the trading strategy. So we will be devising some trading strategy based on the outcome we expect from the markets, from the indicators, moving averages, RSI, time cycles, and also combining with Elliott Wave to understand the maturity of the trend. Let me also share across one more screen of the monthly research report which we recently published, and that research report will show how markets have been moving based on the Elliott Wave perspective on a bigger time horizon. So this is the screen. If you are checking, this is the monthly research report which we publish every month to our clients, and this research report shows various aspects of Nifty along with the bigger chart. So if you look here, this is a monthly chart of Nifty, and along with Bollinger Bands again, and why the zone of 9,000 is so important. You can see clearly from this chart. We have explained it on a lower degree, and we have explained it from a much lower degree, along with a lot of justification. So there are a lot of concepts which are explained in this research report, and if anyone would like to understand about the medium-term trend to long-term, can probably get access to this report. And there are short-term reports as well which we keep publishing. So as of now, again, we are at a very important juncture. Break of the important levels which we'll be mentioning in the short-term updates will confirm that the trend is reversed, and unless that confirmation obtains, we will continue to believe that what worked in the past will work in the future, and so there is a possibility we might again see some kind of a pullback or push on the upside from the current juncture. So we are again at a very important levels as of now, and let's see how next few days pans out, and understanding the each and every move from Elliott Wave perspective is going to be now very important to see that if prices are able to take out the previous fall over past 2 days in faster time or not. If it is not taking out in faster time, then probably we might have a final push on the upside in the form of wave C of G, and once that is complete, then we might be headed for some trouble. So I think that's it from me for now. And again, a reminder, in case you would like to register for the 2 days webinar event, which combines all these techniques together in a very detailed explanation along with time cycles, you can please write to us at helpdesk@wavestrategy.com, or contact us on 9920422202, and me or my team will be more than happy to assist you for the registration. Thank you very much again, and see you over next week on Friday for the same Wave Strategy Elliott Wave News channel at 4 p.m. In case you missed this webinar, you can see it on at 5 p.m. on our website, wavestrategy.com. Thank you.